Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, level analysis or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, New York coffee. Okay, so I said 10 weeks ago, and I quote, "One new pattern has developed and two new patterns have started to develop. The easiest to see is the possible monthly key reversal we have on the cards for August." End of quote. Well, this pattern did develop into a monthly key reversal up for August, for which we have seen a follow-on higher in September, and even now, with and after changeover, we have seen prices move higher, but from a lower level, filling in the changeover gap. I carried on back then, and I quote, "The second possible pattern, and this is not as clear here as it is in London coffee futures, but we might have formed a June or possibly a late April to date descending scallop pattern. This looks like a backward letter J on my daily chart. We now need to watch out to see whether the market turns lower or heads higher, as I suspect this pattern is coming to a climax, and I would then be able to give some idea of the move, either higher or lower. This pattern has become more real in recent weeks with the peak of the upswinging letter J." End of quote. The upswinging inverted letter J, my apologies. This descending scallop pattern became a triple stroke quad bottom, and a subsequent move up from the earlier descending scallop pattern became an ascending scallop pattern from late July till mid-September. Not only that, but we might very well look at the whole June to date action as a possible cup with handle pattern. And even though I do not hold with this view right now, and even a large March to date reverse head and shoulders pattern. However, what we can easily see from the recent action is that yet again the high at 429.5 from February this year has capped the rise in September, as it did in early March and late April. So what can we now expect from this market? Well, the lows 5 weeks ago ended up being just ahead of the key 50% Fibonacci line for the important November 24 to February 25 move at 33.35.15. And back then, it had pierced the unbroken assistance of the medium moving average, currently at 339.60, as well as the rising green short medium moving average, currently 368 even. Today we are over both, and we seem to have built a small base since late September on the very slowly rising gold long moving average. Currently at 356.90. After pushing up through it 5 weeks ago, when it was back then acting as a cap. Last week we explored higher, but last Thursday saw a capping action, which I will describe shortly. And it ended up that day as a key reversal down and bearish double pattern combination. All this action high has left us with a number of interesting situations. Thus, I drew 3 weeks ago a beginning of August to late September bullish Andrews pitchfork. However, the market pierced the lower time for this pattern, and I have downgraded it and instead finessed it to a bright green bullish shift pitchfork for the same move. And this is where the capping action came in, as last Thursday the cap of the bright green middle tine, which is currently at 421 even, acted as a cap on that bullish action that day. Today we have seen the market drop down to test the support of the bright green lower tine, piercing it, which is currently at 372.20. And nearby to it we have the green rising short medium moving average, currently at 368 even, which is touched and bounced back off again at the moment. And of course a little lower the rising gold long moving average. Now I'd watch these three, the bright green lower tine, the green short medium moving average, and the gold long moving average for the next week or so, as the action there or not there will not only be interesting but also telling for the future. Now, something else I like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee futures 30 weeks ago, and I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You can see on the monthly longer term charts, or I noticed back then, a pattern that has not been immediately obvious to me at the start of 2025, when I earlier reviewed the longer term charts. is a multi-year 2012 to 2024 very large reverse head and shoulders bottom with a bright red neckline on my chart, currently at 376.25. The break higher over this neckline reached its primary target on the upside, but there was a secondary, much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433.75. That's quite close in the scheme of things. Prices did indeed turn lower at this key combination of the 100% projected Fibonacci line and the target of 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August, the market started to form a base on top of the bright red neckline. August, with its monthly key reversal up, raced all the way upwards, and we saw an extension to that move up in early September, but not reaching quite as high as we saw back in February, before dropping lower and setting up September as a monthly bearish harami. However, since then we have not carried on lower, at least not in October, as prices have started to move back up, and right now, well, we might have a potential for a monthly, we did have potential for a monthly bullish engulfing pattern, but it looks like maybe a possible bullish thrusting pattern or piercing line pattern. The top side had resistance between 371.25 and 375.75, since engulfed, just about, and possibly further resistance up again at the old broken upper time, which is currently at 391.5. That's of the former 2019 to 2023 bullish Andrews pitchfork. I personally don't favour this resistance much, though we have stopped there for now on a closing basis in the past. Meanwhile, on the downside, the real key, will be the bright red neckline below. However, the old 50% projected Fibonacci line at 347.20 looks interesting. I should point out one more final feature on this longer term chart. The possibility that we may form a large bullish halfway hesitation or a possible double top, with all the contrary implications both these patterns may have. I will not discuss this last point any further, as it is way too early to isolate which it will be, but in all this, I ask you, please remember these here are monthly charts, longer term, in some cases very long term patterns. London coffee futures. 25 weeks ago I said of the bearish pressure in this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press lower, heightening the breaks lower. The rise since early August pushed up through some significant resistances, now turned into supports, and more so, these are some keen, at the time, relatively close to the market supports. Notably, the trio of interesting 50% Fibonacci lines, for November 21 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, the March 20 to February 25 move at 34.81. Then there is a congestion of 61.8% Fibonacci lines at 41.68, 41.87 and 42.90. All these are now back to being supports, as is the flatlining pierced but still valuable mauve medium moving average, currently at 40.33. However, above the market, we now have some former supports that are now once again resistances, notably at the 50% Fibonacci line for the February 25 to date move, which is actually at 45.05. That had been tested throughout October and has not given a fulsome answer yet as to whether it is broken or just breached, despite the key reversal and bearish double seen last Thursday. Further up, we have the gradual dipping gold long moving average, currently at 46.52, which eroded a lot of the bullish incentive back in September and late August, as well again last week, causing only one single close above it before prices turned lower. Now, last week, I suspected the most important of all was back then just above the market, and is the capping dark blue February to date downtrend, currently at 47.15, which caused a lower second high in mid-September when compared to the late August high, and an even lower high, though not by much, last week. Finally, after all the erosion we saw from the gold long moving average and the dark blue downtrend, we have what I thought might be interesting, but which proved last week to be crucial, and that was the lesser Fibonacci line at 48.22. This capped the rise last week, as it did back in September and I suppose also in August. The first two resistances started to form a double top, but then gave up in favour of another action, and it might just be the bright green lower time with the aid of the green short medium moving average below. All this is important, as a cusp in the market is coming in just under 2 weeks. You see, at the end of next week, the dark blue downtrend slips below the green lower time, and I suspect we may see volatility ahead and at that time. Additionally, the 50% Fibonacci line at 45.05 and the declining gold long moving average and even the dark blue downtrend may likely come together in the middle of December. So I'm looking at some potentially exciting times ahead. Just remember this, it may be easier to sometimes wait, the market to wait and break a pair of close together supports or resistances than to try to take them on each individually.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.